Hey, Kathy. Hey, Tanya. Manling.
Hello.
How are you guys doing?
Good. How are you?
Good, good.
Hey, Victor, I have to just step away for 2 seconds. I'll be right back.
Okay. Yeah, we probably won't start for a few minutes here. We'll let people start coming in.
I like your background.
Thank you. Yeah, I like to keep the background on because if not, then you're just gonna be looking at like my bedroom. And yeah, I have a mess back here, so it's a lifesaver. Hey, Brad. Mike, good morning. Well, good afternoon. Depending on where you are in the country, I guess.
It's just afternoon, man.
Yeah. Good morning and good afternoon to everyone. We're going to be starting up here in a couple of minutes. Just give a couple more minutes here for people to start jumping in, and then we're going to get off. Let Sara drop some knowledge on everyone. Make sure no one's on Facebook blowing me up right now. Travis, how's it going, man?
Great. How are you?
Good, man. Good. This is going to be a fun one. Everyone loves talking about getting more money, right?
That's right.
I do want to pull up. I know a couple of people had some introductions within the class, so I'm going to pull that up. Gabriel, good morning / afternoon.
Morning, how's it going?
Pretty good, pretty good. We're gonna get going here probably in about 5 minutes. I'm just gonna give a couple more minutes for people to start dropping in, and then we'll let Sara take it from there.
Okay, sweet.
While we wait for everybody to kind of join up, those that are on right now, are you all captives wanting to go independent? Are you independent already? It'd be a little helpful for me to have a feel for where you all are coming.
I'm independent. I own an agency for a while now.
Awesome.
But
How many?
I just became LLC maybe about 2 years ago and going S Corp.
Nice.
So I really need to figure this thing out.
Absolutely. Absolutely. All right. Lots of independence. All right. That's the way to go, right?
Yep.
All of those options.
I'm pretty sure everyone in here is independent, if I'm not mistaken.
Uh, Fabulous. I would do like it when I get to talk to those that are captive and are ready to make the leap too. So that's always fun. I think everyone, did anybody start out captive or everybody start out independent?
I started off captive, yeah.
Yeah. And you know, that excitement as you get ready to make that leap, not really knowing the craziness that for you on the other side. You know, you get to know one system really, really well, and then all of a sudden, welcome to oh my gosh, the worst MetLife. That was not fun, not a great system.
I can promise you MetLife's way better than nationwide systems.
Oh, I forgot how bad there was. Oh my gosh, yes.
Anyone who's on personal side and deals with nationwide, horrible.
Mm-hmm.
I consider myself pretty not super tech savvy, but you know,
Enough to be dangerous.
yeah. And man, I felt like it's going backwards with nationwide until they rolled out the new one, but Florida was the last one to get it.
Oh goodness.
All right, 2 more minutes and then we're gonna get started here. Okay, guys. Appreciate you all being here today. MetLife is the worst.
The worst. Kathy, I am so sorry. 33 minutes to have a call answered. That's hey, better than progressive Sundays, right?
It's down. It's down from 2 hours.
Oh my gosh.
Yeah. I was like so pleased. They answered my call. I was like, oh my God, please don't be hanging up on me.
Oh my goodness. Oh, I tell you what, my neighbor is she's a former adjuster for Progressive on the auto claim side. She was just bombarded all of the time. She actually left because of just the high volume nonstop. And I'm telling you, I'm like, okay, well, that sounds like it's consistent across the board.
Yeah.
Not good.
Well, what my rep said is that they did not hire new people when they did the merger, but they put everybody on the same system.
Oof.
And I called yesterday before I called them, I called an agent friend of mine who's a farmer's agent to see if she knew how to do what I needed to do.
Oh.
She didn't. So
Oh. Nice to have those friends though.
That's my strategy. My strategy is just to learn how to do everything, but it's impossible like all at once, you know?
Mm-hmm. Absolutely. Absolutely.
All right, so perfect. At 12:10 here, we're gonna let Sara, who's with Huntington National Bank. Did I say that correctly?
You sure did.
All right, we're gonna be going over business expansion funding with you guys. So if you do have questions, please make sure that you save it for Q&A after she's done. And I'm gonna let her take it from here, okay?
All right. Well, thank you for the introduction. So if my brief chatter before we started wasn't a clue, I also was an agent before I became an SBA lender. So I feel your pain and also celebrate your successes. I'm still a member of many of the various Facebook groups and love to stay connected to the agent community. With regards to expansions, SBA is an excellent tool for expansions. Part of the reason that I love SBA and why I went this way in forging my new career was because there's no prepayment penalty. And I don't know about you, but within my business, it was this constant like, okay, what is the right way to go? Do I need to finance and streamline? Do I need working capital? What do I need to do? And SBA is just an excellent solution for a lot of those problems and doesn't come with so many strings attached. So with SBA, with expansion, part of and I would say the most important thing is to make sure that your house is in order before you go out looking for a book to buy to expand. And what do I mean by that? On your tax returns, if you are using your business as your personal expense account and you are nickel and diming yourself to lower your taxable income, you're not doing yourself any favors. We're going to look at that and we're going to say, okay, what is the net operating income of this business? What is their ability to service this debt? And if you've got, a couple of car leases on there and maybe you're, everything else that can be tempting to include in your taxes, and you show that big net operating loss where you're losing 20,000, however much it is. If I can't reasonably add that back, and I'm not talking about you telling me, hey, I lease those cars and that this is really just my car, but this is for taxes. I'm not going to be able to get that through underwriting. We're going to look at that and we're going to say, okay, this is not clean. This is not a ideal situation. This is operating at a loss, and we can't trust based upon just saying, hey, yeah, I do this for tax purposes, that this is a business that could service that debt. What we're going to want to see is some profitability. We're going to look at it and we're going to say, okay, what's their interest expense? What can we add back reasonably, which is depreciation, amortization, and interest. We can add those items back. And if we can get you to where you're profitable in and of yourself, we're going to look at that in combination with the agency that you're buying. So another thing to keep in mind is, does the agency that I want to acquire, is that something that is, is that an agency that has kept their books clean? Are they operating loss? Is this going to work? And let's say that you want to expand organically. So you want to just invest in your business, then we can absolutely look at working capital. But again, you're going to want to make sure that your tax returns and your projected revenues from that expansion. So for example, let's say that you're like, hey, Sarah, I need to borrow $250,000. I'm going to hire 6 people. I am going to bump up my marketing and I'm going to spend $15,000 a month on leads. And I'm also going to need to buy computers, and I'm going to have this office, or I'm not going to have an office. I'm going to have a remote space, but I still need to get my people to where they have scanners and they have laptops and they've got monitors. Then you give me that project cost and we look at it and we say, okay, here is your base income today. And this is what your expansion income would look like, assuming, and this is where you walk me through. You say, okay, I assume that if I'm spending $15,000 a month on leads, that will result in my 6 LSPs all producing X amount of premium, which at my contracted rate is going to give me this. And these are my expenses. And we look at that and I put it into a pro forma, and it tells me, okay, at the end of this performance, and I can look at 2 years, that's key, right? Because you're building renewals. We're not going to necessarily require that you're profitable in year 1 of your expansion, but by year 2, we need to see it. So show me that renewal income. Show me how that's going to impact and drive your business and drive your profitability. And from there, we look for a certain debt service ratio. So we're looking to see, okay, hey, was it profitable to begin with? Could they cover their personal bills? Could they cover what the agency was involved in? And then from there, what will this new revenue do for them? Do they have a solid plan? We're going to require that you submit a business plan along with those projections, those 24-month projections. We're going to require that you give us tax returns for 3 years. So you don't just want to keep, the most recent year clean. You're going to want to make sure that you've been doing things by the book for a couple of years. Keep that profitability to where you'd much rather show a little bit of profitability and give me some reasonable add backs than be like, Sarah, I've got $200,000 in my bank account. My business is profitable. I just don't pay taxes on that. It's not going to fly. beyond that, as you look to, and I'm kind of going two different directions here, because I know there's organic expansion, we've got acquisition expansion, and everybody wants to buy a book, right? Like, I think there's probably 100% of the people here today that if they had the chance to buy a book would probably buy a book. So I want to cover both, and any questions that you have at the end on either one, we can cover that. Now, with this, as far as, say, starting new, as far as, let's say that you're like, hey, I want to leave this contract that I'm in and I'm looking to start a new agency. It's going to be under a new agreement. Let's say that you're with an aggregator, that the relationship breaks down, or you're under direct contracts, but you're having problems with your carriers. And so you need to join an aggregator, and you're basically starting over again. Okay. From there, we can also do a loan. We can do a startup loan that would technically be, you're experienced. You wouldn't have to bring as much in as far as equity injection. And you would, again, put together those projections, write out a business plan, show me good tax returns. Those are really the key elements of getting to an approval. On the personal front, it's really great to prepare when you're looking for an expansion loan or an acquisition loan or a startup loan for that matter, with keeping your personal house in order. I can't tell you how many loans I look at where a borrower comes to me and they have the history on work experience. They know what they're doing. They have excellent business plan, and then they have like nothing saved to go towards the project. Which there are some ways around that, not necessarily around it, but through it. For example, if you needed additional equity injection funds, if you have an old 401k, there's a potential for routing that through a ROBS account, where you basically set up a C Corp, and the ROBS, your old 401k, then invests with you into the project. So it becomes its own entity, and those funds go there. You partner with your own retirement plan, and then you invest in the business together. There's not any tax ramifications from doing that. So it creates an excellent way to invest in yourself. And then let's see, as far as, I'm trying not to get too underwriter on you. There's a lot of things that get a little nitty gritty. So if I'm going too far, Victor, I'll rely on you to be like, pull it back a notch. We don't need to go that deep. When we're looking at a project, so you put together the anticipated cost for me. We call it sources and uses. So anything that isn't equipment, furniture, tenant improvements, it's all going to fall into a bucket we call working capital. And the way that the loans work from there, so again, going back to expansion, or even if you're buying a book and you want some extra cash, it works as a draw to term. So over the course of 6 to 9 months, we look at the project and we determine which way that would work. You submit over invoices for the funds that you're drawing off of your loan. So let's say that you apply for $200,000 for expansion. You would send over an invoice to say, hey, Sarah, I need to run payroll in 2 weeks. Here's what it's going to be. And then we would disperse those funds into your account. And during that period, it is interest only on the principal amount. Okay. And at the end of that draw period, it flips to a 10-year, the remainder of the 10-year term. So if it's 6 months, it would be 9 years, 6 months. And then as far as the, again, no repayment or no prepayment penalty for those items. So if you get to a point where you're like, hey, this product doesn't necessarily fit my needs anymore. I want to buy this building and I want to, refinance this into a different loan. Absolutely. Go right ahead. Like, you are free to do so. It's pretty great. Personally, I got hit with a 3% prepayment penalty on my note when I sold my book, and that hurt on the way out. So it's definitely nice to have something available to where you can avoid that kind of pain. I feel like I've covered a lot of things, and I'm hoping that I don't have your head spinning. Victor, I think I'm at a good spot to start fielding some questions.
Yeah, if anyone has questions, you can unmute your mic and let's ask away.
So my agency is less than 3 years old, so I only have so far
2
one
years.
tax return for like
Oh.
part of a year.
Uh-huh.
Well, it will be, you know, it will be prepared this year for 2020. Yeah, it was on extension. So she's gonna prepare probably that half a year and then, you know, this 2021 together.
Okay, so what we would look for there in review would be your P&L.
Okay.
With the requirement that, you know, especially if we get to where you're, like, let's say that you applied next week and we get to where we have an approval, but then we would be closing closer to filing deadlines. We'd ask for those returns prior to,
Okay.
or the extension filing if you extend it again. But we can absolutely work with that. I do loans with P&Ls all the time.
Okay.
I have a question, Sarah. I've been doing insurance for almost 25 years, a long time. But 2 years ago, I created the LLC. We're creating an S Corp this year. And we do have a monster book of Medicare and Obamacare, so the residuals are always there. And we're looking for expansion. I think I got 7, 8 girls that work for me. I'm in Austin, I'm in South Texas, so now I have 2 spots where I'm at. And that's been my struggle, or I really just haven't really had the time to look at an SBA loan or anything. But I mean, what would you say on my side you would recommend? I mean, we're in the process of just investing a lot, and we have capital, but we're just avoid using, you know, my capital and just going big, because every year I go through my money. I mean, every year I get all these renewals, and then we go through it throughout the year. But we have consistent residual income coming in from the Medicare, from the Obamacare. And I think we're to that level where, okay, we really, really want to branch out. We got about, I ran with about 6, 7 agents, but just recently we picked up about 20, 25 in the last 2 weeks. So we're there to expand. And that's really where I need help.
Okay, absolutely. Yeah. So a couple of things there. If you put together your project costs, you would say, okay, in order for me to execute this, I need, let's say that you're working on a 6-month timeline, that you're like, 6 months is what I need to get this up and running as far as the working capital. So you would go through and you calculate, okay, I need this to meet payroll. I need this to meet marketing. I need this to cover, you know, the monthly tech fees, or your rent, or whatever it is. You put together all of those costs, and that becomes your project costs. Okay. So from there, I would take that project cost, because you're already established. Depending on how the calculation worked out for the with the projections, because you would take that and you would say, okay, if I borrow this money and I fund this project, it's going to produce me this gross revenue, it's going to have these expenses, and at the end of the 12 months, this is what my net income would be. And I'm going to take that net income figure and I'm going to look for a debt service ratio. I'm going to say, okay, if he has $300,000, that's going to allow him to produce $1 million in revenue. It's going to cost him $850,000 to get there, and the remainder is available for debt service. Oftentimes, I take a more conservative amount and I leave some buffer zone in the operating line. But I look at that net income. What could I reasonably say would be the net income based upon these projections? Is that net income sufficient to meet the debt service requirement that we have? The SBA requires a certain minimum debt service ratio. So then the credit overlay that we have is on top of that. So let's say that you wanted to open a 3rd location. Do you know what that plan is? And this is actually something more so we would take offline. But if your plan is to say, bring everyone together in one space, get a 3rd location, all things that we would need to have written into that business plan, how you plan to operate, and then also within your projections, you basically write the story of how you're going to expand your business, and then use your projections to show the financial impact of that expansion.
Okay, awesome.
And that's something that I am available to give feedback on those things. If you send me over something and it's not right, I'm going to say, hey, this isn't what I need. Here's my feedback. Try again. And there's no reason that anybody should ever feel beat up about that. My goal is to help, because you know, You don't do this every day, right? I can take
Exactly.
something and say, this is going to work, or this isn't going to work, and here's why. And are the factors that I'm seeing on paper, are they fixable? Do we just need to phrase it a different way? We need to do here. Okay.
Okay. Awesome. Thank you.
Absolutely. My pleasure.
I got a question, Sarah. There's nobody else.
All right.
All right. Hi, Sarah. I'm Brad. I own my own insurance agency, and I'm just a one-person shop. So I started it'll be 2 years in May. So I have one tax return done and a second one that I'm getting ready to get prepared. But I am an LLC, and I file my taxes married, filing jointly, and then the business is on an extended Schedule C on the 1040. Is
Okay.
that okay? Do I need to
Yes.
switch that?
Nope, you're totally fine. Schedule C is,
Okay.
they look at Schedule Cs all the time.
Okay, got it. That was my only question.
Okay, good.
Hi, Sarah. This is Olivia. Hi. So my situation is kind of different. So I actually started in business, I guess, like producing revenue in my business September, I would say October, right? So last October. So I'm very new to the whole space and all of that stuff. Not really new to the insurance industry, but kind of just new in my business. So I am actually, this was perfect because I'm actually looking for funding when it comes to that. So what would you recommend for somebody like me? I've been looking into grants and stuff like that because I don't have an established tax returns and a history of business. So how do you recommend I go for funding?
So you're actually in a sweet spot. So my bank does loans for startups. So if you have the experience, you don't have to have a business tax return filed yet. Like, let's say that you at your previous insurance experience that you were a producer in an agency and you're branching out and you're going on your own.
Yeah,
that's sufficient. If you've been doing it for a couple of years, that is completely sufficient. You just need, again, to put together projections and write out your business plan. It would need to be something that made sense and that the underwriter wanted to do. And the projections would need to result in a debt service ratio that's within our credit box. But I would definitely recommend, because you're still in that startup period to where you can be counted as a startup and you can use those projections. Would be to submit an application. If you're wanting to say a one-person shop and your loan is request would be under $100,000, I would recommend. What state are you in, Olivia?
Virginia.
Virginia. Okay. I would recommend working with we do loans in Virginia. We do loans in every state other than Hawaii and Alaska. But for those smaller loans, they typically run a little bit smoother if they're through a branch. And if you were in our footprint, then I would say, hey, go to these people. They can walk you through it. That said, let me look and see how close, because we have some branches in West Virginia. What part of Virginia are you in?
I'm in Northern Virginia.
Okay, not going to be near West Virginia. Okay. Let me see if I can find you some resources. It may not be with my bank. It may very well be with my bank. And we can chat offline, and I can take a look at where you are, where you're going, what your plan is, and give you some advice from there. Even if it's not with my bank, I just want to see people end up in a spot where, they get what they need to get going and be successful.
Thank you. Yes, that would be amazing for me in my business. So thank you for that. And I just followed you I funded you on Facebook.
Oh, awesome. Okay, good deal.
So I'll show you a DM right now and we'll stay in contact.
Perfect.
Thank you.
Yeah, and Sarah, before we take any more questions, if you want to share your email with everyone, so that if they do have questions and want to reach out directly, they can reach out to you via email.
Absolutely. I'm putting it in the chat right now. And if you don't hear back from me, I am very much so connected at the hip to my email. Much to my 8-year-old's chagrin, he's not a fan of my email. But if you don't hear back from me, if you could find me on Facebook, connect with me on LinkedIn, send me a message. Sometimes those messages will go through our junk filter and they won't end up to where I can get to them. So please, please, please reach out, because I will always respond, even if it's, hey, let me check into that and get back to you tomorrow or the next day. I will always send you a response. Any other questions? Anybody have any questions on how the loan works, which I think is like the most boring part of the whole thing. Getting the money and using it is the fun part, growing your business.
One more question for me. So, how do like the interest rates, like your guys charge, is it based on like a business's financial, like basically how they are established? Like how is it based on?
So our rates, and that's an excellent question. Our rates are prime plus, and then there's a target rate. So prime plus 2.75 is the max you're going to see come out of our shop for something that's more competitive as far as how the project looks. You may see a little bit of flexibility there to prime plus 2.5. But that's going to be within our target range. And that rate is adjustable on a quarterly basis. The rate being adjustable is what allows us to not have that prepayment penalty and to be able to do the work that we do. There are some banks out there that do have a more fixed term product within SBA. I can't speak to who they are because I don't know who they are. I just know that they're out there. But from my understanding, that requires them to place covenants on their loans and to have like prepayment penalties, things like that, things that we're able to avoid by not having a fixed rate. So it's not out there. So if somebody tells you, hey, yeah, I got an SBA note and it's fixed, that may absolutely be. I just know how we do them. We are the #1 SBA lender in the nation by volume. So we do more SBA loans than any other bank. And that was a footprint of 9 states that only went national except for Alaska and Hawaii in October. So we do
Cool. Okay, thank you.
My pleasure.
And were you able to get that email in there for everyone?
I put it in the chat. Did it not come through?
No. Do you want me to put it in there for you?
Oh, you know what? Because it looks like I just sent it to Kathy. So sorry about that. Kathy had it. Nobody else got it. Just one second.
Oh, Kathy. Keeping everything to yourself, Kathy.
I just didn't even realize I was the only special one.
There we go.
I mean, I am-
Sarah.jackson@huntington.com. So if anyone wants to reach out with further questions or wants to hook up and work with Sarah, that's going to be your best point of contact right there.
And I'm going to drop this neat little thing really quick before we go, Victor, because I was able to do this for an agent back in November, and it was one of my favorite things. So if you're looking to have a brick and mortar location and you are wanting to own it, owning real estate can allow your term to be spread out up to 25 years. So it weights it based upon, like, let's say that you want to buy an office condo when it's $200,000, but you need $300,000 in working capital. It's going to have a lower term. It's going to be closer to that 12, 15-year mark. But if it's 50% real estate, 50% working capital, or a little bit less on the working capital, we can take that out to 25 years. Now, there is a 3-year prepayment penalty when it goes out beyond 10 years. But the amortization on that is pretty amazing when you look at being able to borrow money that's working capital for such a long term. So if anybody has that specific situation that they're eyeing some rent replacement on buying their building or finding another location, please feel free to reach out and we can look at how that could be structured to help you decrease your monthly expenses and increase your revenue and cash flow that's available for growing your business.
Awesome. Anyone have any other questions while we have Sarah here?
Just, I think I have a question brewing. I'm just trying to figure out how to put it together here. So just in general, Sarah, can you talk a little bit about the differences in a loan or the differences in the process for us for purchasing a book versus purchasing an agency that has employees versus purchasing an agency that has employees and a building and that kind of thing? Is there a difference, or is it just, hey, we're only going to give you X because of, yeah, go ahead.
So it's all going to be underwritten the same way. Your term can be different if there's a real estate involved. We're going to look at it like, even if you say, hey, I'm only buying the revenue, I'm not buying that none of the employees are coming with, nothing's happening there, then we're still going to look at it and say, okay, what are you going to be able to, like, will you need employees in order to be able to do this? Does your business plan show that you're going to be adding expenses? And if so, what reasonably can we expect? And but we'll underwrite it all the same way.
Okay.
And this is not a collateral program. So it's always nice to have collateral. Like, it definitely helps your approval potential. But this isn't something that's tied to collateral. Now, something that is important: loans over $350,000, the SBA requires that the bank take a position on any personal real estate where more than 25% equity exists to fair market value. So if you go to apply for an SBA loan and you have more than 25% equity to fair market value on any personal real estate, just be mindful that could be that you will be required to use that. Now, if you have a HELOC, even if you're not utilizing the HELOC, that would negate that equity, then the bank is not required to, but it is an SBA requirement that the bank take that if it is available.
All right. So are you telling me, without telling me, to open a HELOC before I start this SBA process? Yeah. Okay.
You would not be the first. It is just something that if that's something to be mindful of. But just know that when we look at your debt service, so your household expenses, we're going to act like you maxed out that HELOC. So we're going to include that in your payment on just assessing you financially. Hey, what would he need if he maxed this out?
Got it. And then the SBA, and just I'm going to pretend I'm a second grader here. The SBA loan is SBA loan program is a like a U.S. government program, correct?
Correct.
That is administered by different banks.
Yes, exactly. So in insurance speak, it would be like the banks are all the agencies, and the SBA is the carrier. So
is the carrier, yeah.
Their rules, their base rules, and then we lay our own over it. So every SBA lender is going to have a different credit box. They're going to have a different risk profile. For example, we will not touch a hotel right now, but I will do a startup restaurant all day long. And other banks, they will do hotels. They won't touch a startup restaurant. So it's all over the place, but we do all start with that. We call it the SOP. So everybody starts with the SOP and then builds their credit profile from there.
Okay. And is this fairly new that the SBA will allow you to underwrite like this book of business rather than a piece of real estate? It's always been this way? Always been this way. Yep.
Really honestly, the SBA is the best kept secret out there. It's not like the conventional loans that you get with, Live Oak and some of the others. Live Oak they're the number one SBA lender by dollars lent in the country. Like they're a big player where we are, but they have other products that they utilize as well. So not to like, they do a great job over there. Like, good for them. But it's not, the SBA has never been a collateral program. It's not based on that at all.
Okay. And the SBA loan programs, just as any owner of any insurance agency is in theory eligible, correct? Because we're small business owners, or is there other boxes we need to check?
There are some caveats. One, so you cannot borrow if you have, and this is anybody. So if you have more than 3 times the available liquid assets of what you're requesting in loan, so let's say that you have $500,000 $100,000 across investments and cash and savings accounts, you can't borrow less, like whatever a third of that would be. So you could not come to me and say, Sarah, I want to borrow $100,000. I would say, I'm sorry, you do not meet the liquidity test. So you have more funds available to you. You exceed that limit. Okay.
Okay.
You also, for our credit box, we can handle one bankruptcy more than 10 years ago. You can never have defaulted on any government issued loan. So that's student loans. That's, anything that is a government backed loan. You cannot have defaulted on it. Okay. That will immediately knock you out. Some banks will lend to individuals who have 2 bankruptcies. That's outside of our credit box. So that's not going to be a place where we can play. Not to say that you couldn't go get one. And that's the big thing to keep is, even if you come to me and I say no, that doesn't mean that another SBA lender would not say yes to you. So don't take a no as a, I can't get this done. It just means I don't fit this credit box.
Got it. Okay, good to know. Great answer. Yeah, I did not know about that liquidity. I'd never heard of that before. So
it doesn't come up too terribly often, but it does come up from time to time. So it's definitely to be mindful of, especially with smaller loan amounts when you may have cash assets.
okay. So in liquidity, does that mean in so the money has to still be within the business? So it's not money that I've taken out personally and having personal investments?
Yeah, it would be like the liquidity component. Like if you across your business and your personal assets had more than 3 times the loan amount available to you, you're not going to be able. Yeah.
Okay. Even if it's in Bitcoin?
Now, actually, okay, point there. So we cannot accept Bitcoin as any sort of liquidity. If you're planning on using Bitcoin, let's say that you are required to put in an equity injection and you're like, hey, I want to use my crypto because, killed it last year and, I'm in a great position. I just want to liquidate some of that and throw it in here. You're going to have to liquidate it and then wait 90 days because we then have to validate the funds. Very similar to any anti-money laundering classes that you may have taken in the past. We have to totally verify your funds and make sure that nothing questionable is going on, and Bitcoin is not recognized. So, yeah.
Okay.
Hi, Sarah.
Hi.
Hi. I got on a little bit late, so sorry if you already addressed this question that I'm going to ask. So I'm a licensed insurance agent, but what I do is I do virtual assisting for insurance agencies.
Okay.
So I hire and train VAs and CSRs for different independent agents. I'm at a place right now where my current location, I've basically outgrown it as far as the amount of CSR I can have there. So I have to get the space next door. Luckily, it was available. So I'm branching out into another space, but I'm going to eventually need to build my own space based on the demands that I'm getting. Probably in the next year or 2, I'll have to build a pretty sizable location, which is great, but comes the issue of funding. So my company is a multinational corporation, so it's registered in the US. It's also registered in Jamaica. The headquarters is in the US, but my CSRs are located in Jamaica. Would there be any restrictions as far as getting funding from the SBA for a company model like this?
So what we would need to do there, we have an entire team that they are explicitly dedicated to eligibility issues. So before you ever even applied, I would take the information that you gave me and I would say, hey, would we run into any eligibility issues here? If so, are there any mitigants to running into those issues? And we would look at it and determine whether or not it was something that was eligible or not. But that's an excellent question, above my pay grade.
Okay. And is there like an email for who I could reach out to with these questions?
So let's see, it should be in the chat. If you don't see it there, since you are late to join, let me know and I'll send it again. But you should see my, Okay, fabulous.
I see your email. Okay.
Just shoot me an email with those broad points, and then I can put it in front of my eligibility team. If they want more information, which they probably will, I'll come back to you and say, hey, can you fill in the story here, and then go back to them and we'll get you an answer.
Okay.
But that's
perfect.
fantastic,
Thank
by the
you.
way. Congratulations.
Thank you. Yes, very, very awesome. Very exciting.
Yes, and shameless plug for anyone who's interested in VAs. I'm gonna get with Celine, and we're gonna probably do a workshop with Celine on VAs too. So if you guys have questions on that, that'll be a future one. I'm gonna get with her on that.
Awesome. Thanks, Victor.
All right, awesome. So does anyone else have any questions for Sarah while we still have her? Going once, going twice. All right, awesome. Well, Sarah, thank you so much. This was super informative. For everyone who's on here, or anyone who catches this on the replay or on YouTube, I'm actually just going to I'm going to say your email if you don't mind, just because they're not going to be able to see the chat on the replay. But her email is Sara, SARA.Jackson at huntington.com. So yeah, if anyone's interested in getting some funding for your business, you can reach her by email. And yeah, if you guys have any questions, that's where you reach her. So I appreciate everyone for coming out today. Sarah, thank you again for doing this workshop, and hope you guys have a great rest of your day.
My pleasure. Nice to meet everyone. Have a great day.
See you guys.